Look at SPY go. Well, I was going somewhere. Hello, session. Ooh, view. Look at view go. My goodness, view. Interesting. You ready to crash it? Maybe. Uh, puts. You have puts? Do you have puts then? Okay, let's go back to the S&P. I just wanted to look at view quick. Oh wow, look at that. Look at that candle. Look at that candle. That's that initial scam candle, isn't it? Okay. 465. 465.20. 465. Interesting. C4 is insane. Oh my, no, really? Look at C4, guys. 100 and what? Oh my goodness. Oh wow. Okay, I'm coming back to the S&P and the Fed and whatnot. Wow. My goodness. C4 is going to $9, isn't it? Anyways, let me run back to the S&P. SPY is pumping. So the S&P is on fire. So okay, I'm all over the place just because we have so much happening. Okay, so Feds. Do you have your why hasn't it updated for me? Why? Okay, there it is. Yep. I mean, not a surprise. Okay, that's why the market's pumping. That's why the market's pumping. Indicates three cuts in 2024. That's why. Spy says, "Oh yeah, you want to do it? Let's do it." Spy's on fire. Puts are for losers. Oh, that thing is gone. Right. As soon as the Fed says, "Oh, you know what? We might do cuts." Yep, it's gone skis. It's gone skis. Let's see here. Let's see. Let's go. SPRC with a little poppy pop there. CCC4 looks amazing. View also looks amazing. CM View is gone skis. Right, so View looks amazing there from that little dip. The S&P, if the S&P could halt, it would be halted. I'm kidding, by the way. Um, can't stop, won't stop, Richard. Can't stop, won't stop. Look at the S&P go. Rally on. Bull market continues. Right, the market priced in the fact that it was going to be the same, right? So everybody knew this was coming, right? We are going to hold rates steady, no more changes, right? This part was priced in already. The part that wasn't priced in was this part. That's why the market now has to price in that part, right? So send it. Send it. Spies hitting 52-week highs. 52-week highs, 52-week highs, 52-week highs, 52-week highs. Market no give a damn, right? If you're holding puts, the market says if you're holding puts, this is you. If you're holding puts. Sorry, virus. Sorry. Yes. Uh, 31. Let's do that. 31. Yes. Command Shift 4. I'll send you more. There you go. uh, announcement. La 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 la. Welcomes. View looks good. C4 looks good. The S&P is on fire. SPY is just on fire. My goodness. SPY is on fire. On fire. That thing is not going to stop. Why would it stop? Right? We don't need anything more than the headlines, honestly. There's no need for us to go look at the Fed minutes and say, oh, this, that, right? So there's no need for that. I'm sure there's more to this article. It's going to be updating, but I don't particularly care, honestly. The only thing that matters is that the Fed is talking about cutting rates, right? And the market says, bye. Oh my goodness, look at the S&P, 467, guys. At the end of this, we're gonna be at the end of this, we're gonna be we're gonna be at let's see, SPX. La la. Okay, let's see. La 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 la. Let's see. Oh, you mean 479? Mm. Yeah, no, if you're holding calls, those things are printing. Clinch. Uh, I'm looking through my desperately looking for any calls. You're not holding any calls, virus. You you want to just the market to go to the abyss. Dang. Uh. Oh wow, that's fire, Rob. It's following technicals. Yeah, maybe it's time to get puts, virus. Maybe it's time to get puts. It's a disease. Maybe it's time to get puts at some point. When he comes on, he's gonna crush it, isn't he? Or maybe we're gonna retrace tomorrow. Tomorrow would be the day to retrace. So if SPY keeps pumping like that, tomorrow is gonna be the day. That's how it usually works, isn't it? Right? We rally on the Wednesday and then we give it back on the Thursday. I'm averaging down. You're making that stick longer, Varys. Oh my goodness, bye. So maybe at the end of the day, if we're still pumping, you might see an opportunity there. And then C4, what a beauty! You're about to short it. You're about to short. Why didn't you short then? $6. And then if you short stuff like that, make sure you have a very tight stop loss. Very tight stop loss. What a rally! What a rally for C4! What a rally! Stand by for boomskis. Stand by for boomskis. $4, 5 and 6. Okay. Dang, that's crazy. Maybe. Oh, let me see if I can find it then. Mm, 31 is what you're looking for. 31. 31. Perfect. Let me go back to the S&P here because buy looks beautiful. My goodness. So Santa Rally. Welcome. Santa Rally. Spy just keeps going. And up 1 cent already. 1 cent. Monies, musty monies. Money. So if you're holding anything long, you're most likely printing. Printing. Maybe another opportunity for a short position. Probably. 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 Dang, view was nice there, wasn't it? Hmm. Dang it. Well, mm, and made $50 in that as well. Quickly, but regret your stop loss now, Musty. That's okay. That's okay. That's okay, Musty. One at a time. Strike them down. Ever in a single day? You did, Dan? Oh my goodness. You can tell that Dan is Dan. You know, you can tell by the words Dan is putting together that he really made a lot of money. You could tell. Dan makes a lot of monies. I remember the one time Dan said I only made $500 today. It was a rubbish day. So when Dan says I made a lot of monies and he's swearing like that, I think he made a lot of money. I think he made a lot of money. Thanks. He said thanks to futures. Dan is loving futures. He's gone. Dan is gone with options. Gone skis. It's over. You know how we used to say Dan the option killer? Dan is no longer the option killer. Dan is the futures killer. Good job. Uh, silly, silly, silly. Let's see. Silly, silly, silly. Futures? Oh yeah, these guys are crushing it in the futures channel. Crushing it. Crushing. So you can play with all these contracts without having, I don't know, you don't need day trades for futures. Oh my goodness, Jameson, why didn't I think of this? There's no day trade restrictions. Oh my goodness, Jameson. This is where your life changed. It was at this moment that Jameson gave up on options, and the rest was history. Yes, 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 Jameson, yeah. Yes. There's no PDT, there's no this, there's no that. There's none of that rubbish. Let me know if I'm wrong. Because as much as we've talked about futures, there's never been a PDT thing. Never been a PDT thing. Yeah. I'm sorry, Jameson. I'm sorry. I didn't think about it at all. I don't know why that didn't cross my mind, but yeah. Last Okay, perfect. Confirmed. No PDT, Jameson. Why would you hide this from me? I mean, Dan was trading options 24/7, and Dan ran away from options to go trade futures. So that should tell you a lot about why people like futures. Leverage futures because they move like but that's what Jameson loves though. Jameson, like if you see Jameson's trading, Jameson plays with leverage, 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 leverage. ODTEs. Jameson is the same as virus. These dudes love leverage violence. So Jameson would love the leverage stuff. Anyway, so we have Powell coming on in 16 minutes, guys. So 16 minutes, and then we will shift. Yeah, no, they are musty. You just have to learn. You just have to learn, right? So there's a video, Jameson. If you go into the, if you want to know what you need to know about futures, take your time. Dan took a month or so to paper trade futures, to watch the videos, right? Look at that. Jameson was in some YOLO calls of 470%. So these guys, yeah. So there's a no KV. Again, paper trade, guys. Paper trade, paper trade, paper trade. There's a video that says with countless. Okay. Also, Jameson, another thing you could do is you could apply for the funded accounts. Right, you could apply for the funded accounts. So you pay a fee, right? You pay however much, let's say $50, right? And then now these guys will give you, they will give you an account and say, okay, well, can you use $50,000 to make this amount of money, and without taking this much of a loss? And if you can successfully do that, then now you have a funded account, and you get to keep this. When you play with it, you get to keep. So you're playing with someone else's money at this point. So that's what a lot of people do in the futures channel, right? They get a whole bunch of accounts, right? And then they make monies, and then they get to keep like 80% of the gains, however much of the gains, right? But you're playing with someone else's money. You just have to pay the fee. Go to the futures channel, Jameson. All the questions, Rob. Go to the futures channel, and yeah, and all the fire. There's a video in the educational channel or the Discord call recap. If you scroll all the way up, let me see if I can find that and send that to you. If you watch that video, it says how to how futures work. So Robin Hoosier, these two dudes are amazing. So this is the video. You can save that and watch that later. Yeah, there you go. Perfect, Joy. Thank you. So if you go into the futures channel, you can check the education thread, and everything you need to know is in there. Right, and just take your time, because if you rush, they will finish you. They will enter you, right? And you can trade futures whenever you want, when you're done work at night. Jameson. Well, obviously time zones do matter though. An overnight fee if you're holding through the night. You pay a dividend to futures, I think. Yeah, yeah. If you're short, yeah. Yes, yes, yes. Yeah, this one's been so annoying today. SPRC, it's been going up and down, up and down, up and down. Anyways, back to the S&P, guys. SPY looks amazing. SPY is going for new 52-week highs. So maybe by the end of the week, we're gonna be at 480, new 52-week highs. Right. This is why people invest monies in the S&P every, because the market is constantly going higher. We could have disasters in the war, hunger, disaster, earthquakes, sinking in the ocean, zombies attacking, and the S&P would still go higher. The S&P would still go damn high. Um e- yes, kind of. Except they're more so connected to like the markets, right? Like connected to the Nasdaq and like crude oil and this and that and this and that. Yeah. Anyways, so anything you need to know, just go into the futures channel and ask. These guys are amazing. They will help you out. What do I think will happen tomorrow? Alex, I'll take a look in a second. No, no, Jameson. No, but it's easy to get the other ones. It's easy. Not a problem for you, Jameson. Not a problem. Yeah, once you watch that video, Jameson, it's gonna make more sense. More sense. Which broker do you use? Because I know there's a. I think most of you guys use the one with the annoying voice. Order filled. Anyways, SPY new 52-week highs. There goes a big boomski candle. There goes new highs for the S&P guys. Oh my goodness, SPY. Sheesh. My goodness. What a beauty. What an absolute beauty. View is still sitting at 350, which is nice. C4 is still holding above 550, which is also nice. RSLS is playing with 40 cents, meh, whatever. And the S&P no stop, guys. My goodness. SPY no stop, SPY go boomskis. Sheesh. Uh, let's see. Oh my goodness, SPY. Oh my goodness, SPY. Yeah. That's yeah. Yes, the annoying voice one joy. Yeah. I think there are multiple musty. Yeah, if you look at TradingView, there are multiple. Yeah, you can use some of those. Look at Vugo. Oh my goodness. Wow. Oh my goodness. View. La. View. 600% on those calls, Jameson. Congratulations. In 9 minutes, Dave. You got kicked out at 357. At least it's still the same price, Musty. Yeah. This buy though, Musty, would have been really good for you. So 320-ish, a triple bottom. This would have been a re-entry, right? So I mean, especially since it just kept bouncing off that level. So 320 would have been nice, and then you'd be back to the same price, almost. You know, SPRC is going back up again. My goodness, wow! From 6 to 630, from six to over and over and over again. SPRC, what a stupid stock. Anyways, there goes the S&P guys. New 52-week highs. You can do anything you want, KB. But most of these guys like they just do futures now. Yeah, most of them don't play with momentum stocks. They just trade futures instead. Let us trust. 467.72 SPY. Oh, we. Na 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 na. I haven't looked at it yet, Alexander. Are you still in at the same price? Do you have a new stop loss? Do you? Because I don't know if anything's changed from the last time we talked about it, right? But I'll take a look in a second, though. I will take a look in a second. Uh, Pump it's going 467.77. Oh my goodness, what a monster! Right? Why SPY go down? SPY no have reason to go down. Fed say we cut rates. Market say we go boom skis. So yeah, simple, right? The Fed cuts rates, indicates three cuts coming in 2024. Well, now Powell comes in and says, but maybe we won't cut rates if the market is in. The market is gonna get slapped hard. If he wavers, The market will enter him. Well, actually, it will something will enter something else. You're losing, Alexander. It's because you don't have a stop loss, do you? Use that stop loss, please. Right? We talked about this one earlier. I think I mentioned a stop loss. This thing is at 1650 now. I told you earlier. I told you what I would do. So I don't know. I told you I would set a stop loss at 1750 something, right? Well, it was right there that it broke down. Right there. That would I told you right there. But then now you're asking me what it's gonna do tomorrow. So for now, I mean, hopefully it stays above 16 cents, right? You have support at 16 cents on the left hand side. You have support at 16 cents. Well, it's about to be slapped again. But yeah, so pick a stop loss, set a stop loss. My stop loss would have executed already. So View is on fire now. Oh my goodness. View just said, you know what? You know what? It's my turn. Dang. View's going for $4 now too. Oh my goodness. Oh my goodness. Anyway, so Powell is on in 5 minutes. So and then we will put him on. We will put him on. That's a nice push. Quick back to the meeting. Let's go, Ron. Get back to work, please. Get back to work. Get back to work. Quick 57%, 54% call on SPY. Congratulations. Get back to the meeting, please. Before the entire meeting says. I hope you're put to a live soon. Well, yeah, virus is hiding in the woods. We're looking at the S&P. So the Fed says the market's pumping, Josh, because of the Fed standpoint there on rates going into 2024. So now we're just waiting for Powell to come on and give us the speech. Oh my goodness, guys, View is on fire. View is on fire now. This is what Musty wanted, wasn't it? Yeah, the only other issue there, Musty, is not FOMOing back in at support. Exit, re-entry, especially with no PDT, Musty. So View looks amazing. C4 is consolidating above $5.50. This stock has been amazing, right? So from $2 to $6 and still has life for now. So and then the S&P just waiting. What's Bitcoin done with that news? Actually, yeah, Bitcoin broke above 42, so that's nice. So everything pumping, guys. 15, 20. Mm-hmm. Quick look at CYN. Sure, CYN. Ooh, not bad. Little bit of momentum. I mean, the only thing it looks okay. The only thing that's missing here, Musty, is the higher than average volume. If it had higher than average volume, I think it would be fire because that thing could run after hours. You know, but it would have to give that high volume. Just need some chips, yes, some dips for the chips. Okay, let me pull up the Fed website here really quickly. He's not on yet. He should be on in 2 minutes. And then, and then we should be good to go. Hopefully he doesn't crash the market, but who knows with this guy. Who knows with that guy? Who knows with that guy? I believe in Mr. V. Well, that dude will enter you with an offering. His email convinced me something is coming. I need to see that email again, Musty. I need to see it again. Anyway, so yeah, View looks good. So move your stop losses up, please, and thank you if you're still in there. C4 is a monster. C4 is a monster, right? 150% and still going. Just landed on my account. Let's go. Come on. Whatever announcement was made. This is the announcement. Okay, Curl. That's the announcement. The market said, "Oh my God," and now Bitcoin is pumping as well. Oh my God. We're gonna cut rates in 2024. Oh my God. Okay, let me pull up Big Daddy Jerome. See what he has for us. Uh, see what he has for us. Uh, see what he has for us. He should be on any second now. Yep. 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 C4 is amazing. I keep saying that. C4 is going for $6, guys. C4 is going for new highs of the day, and it's sending it. My goodness. That's very, very, very impressive what that stock has done. Very, very impressive. And there goes C4. Dang. It's a double top though, so and then crashed.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Chris Rugaber at Associated Press. I wanted to ask, how should we interpret the addition of the word any before additional firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you.
So specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we were thinking.
Mr. Chairman, the microphone, sorry. Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So of course I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally it begins to be the next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question, and that's what people are thinking about and talking about. And I would just say this: we are seeing strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. That's really the question that we're on. But of course, the other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
Can you give some color as to the nature of that discussion today? Thank you.
Sure. So it comes up in this way today. Everybody wrote down an SEP forecast. So many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement. Like, this is what I wrote down, this is what I think, that kind of thing, and preliminary kind of a discussion like that. Not everybody did that, but many people did. And I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Rachel? Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that that there will be a recession in the next year. And it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it, so it's a possibility here. I have always felt since the beginning that there was a possibility because of the unusual situation that the economy could cool off in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
I'm curious if you're looking back on the past year, you talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters, a very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus or a little more than that growth year at a time when potential growth this year might even have been higher than that just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but in a very different setting. And I would say the labor market, because of the stronger growth, has also been significantly better. If you look back at the SEP from a year ago, there was a significant increase in unemployment. It didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one that's coming back into balance with support from the supply side, a greater supply of labor. It's that's what we see, and that I think that combination was not anticipated broadly.
Thanks, Howard Schneider with Reuters, and thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates next year. Whether it's a coincidence, for example, that the spread between PCE inflation, core inflation, and the federal funds rate stays constant over the year. Are you simply calibrating against the fall in prices, in the price level that you're expecting, in the rate of inflation that you're expecting, as opposed to supporting the economy?
Nothing quite that mechanical is happening. The SEP really is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy. And I think if you look at the big difference from September in the SEP, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down they basically each individual writes down a forecast and a rate forecast that goes with that forecast. We tabulate them and publish it. And so it isn't, you ask about real rates, I take it, that is something that we're very conscious of and aware of and monitor. And it's certainly a big part of, it's a part of how we think about things, but really it's broader financial conditions that matter. And as you well know, it's so hard to know exactly, what the real rate is or exactly how tight policy is at any given time. So you couldn't follow that like it was a rule and think that you would get the right answer all the time. But it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
It sounds like the discussion over that, if I could follow up, has already kind of begun. I'm wondering, just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over that assessment, really, over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was, 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward, but that's another assessment that we're going to make very carefully. So as time goes forward.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've argued over the last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level, with cuts beginning around March. Is this something that you are broadly comfortable with?
So this last year has been remarkable for the sort of seesaw thing back and forth we've had over the course of the year, of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how we need to use our tools to achieve our goals. And that's what we really focus on. And people are going to have different forecasts about the economy, and those are going to show up in market conditions, or they won't, but in any case, we have to do what we think is right. And, in the long run, it's important that financial conditions become aligned or are aligned with what we're trying to accomplish. And in the long run, they will be, of course, because we will do what it takes to get to our goals. And ultimately, that will mean that financial conditions will come along. But in the meantime, there can be back and forth. And, I'm just focused on what's the right thing for us to do. And my colleagues are focused on that, too.
The markets seem to think inflation is coming down credibly. Do you believe we're at the point where inflation is coming down credibly?
Listen, I welcome the progress. I think it's really good to see the progress that we're making. I think if you look at the 12-month measure, look at the 6-month measures, you see very low numbers. If you look at 12-month measures, you're still well above 2%. You're actually above 3% on core through November at PCE. That isn't to say I'm not calling into question the progress. It's great. We just need to see more. We need to see continued further progress toward getting back to 2%. That's what we need to see. So it's our job to restore price stability, and that it's one of our two jobs along with maximum employment, and they're equal. So we're very focused on doing that. As I mentioned, we're moving carefully at this point. We're pleased with the progress, but we see the need for further progress. And I think it's fair to say there is a lot of uncertainty about going forward. We've seen the economy move in surprising directions, so we're just going to need to see more further progress.
Gina Smilik, New York Times. Thanks for taking our questions. In the SEP from today, growth is notably below potential in 2024. If growth were to surprise us again in the way that it has for years now by being stronger than expected next year, would it still be possible to cut rates? Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is inflation. So is labor market data. So we'd look at the total as if we make decisions about policy changes going forward. We're going to look at all those things, and particularly about as they affect the outlook. It's ultimately all about the outlook and the balance of risks as well. So that's what we'd be looking for. If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%, but if we see stronger growth, we will set policy according to what we actually see, and so that's how I would answer.
I guess the question I'm asking, if you don't mind a quick follow-up, I guess the question I'm asking is above trend growth itself a problem?
It's only a problem it's not itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust, what that will mean is probably we'll keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean ultimately that we would need to hike again. It just is. It's the way our policy works.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
So on the better balance side, there's just a lot of things. It's you see job growth still strong, but moving back down to more sustainable levels given population growth and labor force participation. The things that are not quite, but let me go on with that list. Claims are low. If you look at surveys of businesses, they're sort of the era of this frantic labor shortage are behind us, and they're seeing a shortage of labor as being significantly alleviated. If you look at shortages of workers, whereas they thought job availability was the highest that it had ever been or close to it, that's now down to more normal levels by so many measures: participation, unemployment, so many measures, the unemployment, job openings, quits, all of those things. So wages are still running a bit above what would be consistent with 2% inflation over a long period of time. They've been gradually cooling off, but if wages are running around 4%, that's still a bit above, I would say. And I guess there are just a couple of other, the unemployment rate is very, very low. And these are, but I would just say overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases.
Claire.
Jones, Financial Times. I'd say the mood among economists at the moment seems to be one of cautious optimism, which is somewhat corroborated by your forecast, by this sense that we are going to have a soft landing. Yeah, then when we hear from the general public, there's a lot of discord about economic conditions. What do you think explains this disconnect, and does it matter for policymakers?
It may be. A common theme is that while inflation is coming down, and that's very good news, the price level is not coming down. Prices of some goods and services are coming down, but overall, in the aggregate, the price level is not good. So people are still living with high prices, and that is something that people don't like. And what will happen with that is wages are now real wages are now positive, so that wages are now moving up more than inflation as inflation comes down, and so that might help improve the mood of people. But we see those public opinion surveys. The thing that we can do is to do our jobs, which is to use our tools to foster price stability, which has such great benefits over such long periods of time, and which is the thing that really enables us to work for and achieve an extended period of high employment, which is so beneficial for families and companies around the country.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, on the flip side of if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job demand-wise?
Sorry, if
If the economy looks like it's starting to fall into recession, if the jobless rate starts to rise?
that's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is the labor market coming into better balance without a significant increase in unemployment, inflation coming down without a significant increase in unemployment, and growth moderating without a significant increase in unemployment. That's what we're trying very much to achieve, and not something we're looking to see.
But would you take that as a signal that you should cut rates?
Obviously what we'll do is we'll look at the totality of the data, as I've mentioned a couple of times, and certainly the labor data would be important in that. And if you can describe a situation like that where if there were the beginning of a recession or something like that, then yes, that would certainly weigh heavily in that decision.
Michael McKee from Bloomberg Television and Radio. Mr. Chairman, you were, by your own admission, behind the curve in starting to raise rates to fight inflation. And you said earlier, again, the full effects of our tightening cycle have not yet been felt. How will you decide when to cut rates, and how will you ensure you're not behind the curve there?
So we're aware of the risk that we would hang on too long. We know that that's a risk, and we're very focused on not making that mistake. And we do regard the two, we've come back into a better balance between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability mandate, and we're getting back to the point where, which is what you do when you're very far from one of the two mandates. You're getting now back to the point where both mandates are important, and they're more in balance too. So I think we'll be very much keeping that in mind as we make policy going forward. And the things we'll be looking at, I've already described. We're obviously looking hard at what's happening with demand, and what we see the same thing other people see, which is a strong economy, which really put up quite a performance in 2023. We see good evidence and good reason to believe that growth will come in lower next year. And you see what the forecasts are. I think the median participant wrote down 1.4% growth, but we'll have to see. It's very hard to predict. We'll also be looking to see progress on inflation and the labor market remaining strong, but ideally without seeing the kind of large increase in unemployment that happens sometimes.
When you begin the cutting cycle, will it be essentially run the same way you do it now with raising rates, where you basically do trial and error cut and see what happens, or will you tie it to some particular measure of progress?
We haven't typically tried to articulate, with one exception, a really specific target levels, which was, some of you will remember the thresholds that we used in, I guess, 2013. The answer is, these are things that we haven't, really worked out yet. We're sort of just at the beginning of that discussion.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. So if the Fed cuts rates, as the dot plot is showing, about 75 basis points, does that signal or that there's a belief of weakness next year in the economy?
It wouldn't, if that were, first of all, let me just say, that isn't a plan. That's just accumulating what people wrote down. So that's not something, this, but allow me to say it again. We don't debate or discuss what the right, whose SEP is right. We just say what they are, and we tabulate them and publish them. So it's important for people to know that, but it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and it doesn't need the tight policy. It depends on the economy can evolve in many different ways, right? So, but it could be more what I just described.
And you focused on core inflation. We've heard from in other meetings. How sticky is core inflation right now?
Well, that's what we're finding out. And we've seen real progress in core inflation. It has been sticky, and famously the service sector is thought to be stickier, but we've actually seen reasonable progress in non-housing services, which was the area where you would expect to see less progress. We are seeing some progress there, though. In fact, all three of the categories of core are now contributing. Goods, housing services, non-housing services, they're all contributing at different levels, meeting by meeting, or rather report by report. So, yeah.
Okay, let's go to Katerina. Katerina Saraiva, Bloomberg News. Thanks for taking our questions. I just wanted to ask a little bit about, we had some pretty positive data this morning and yesterday. I'm assuming those were not incorporated into the forecasts we see today. But I just wanted to ask, how that kind of adds to your thinking, on the inflation outlook.
Right. So we got CPI the morning of the first day, and we got PPI the next day, which informs the translation into PCE. So it's very, very late in the game, but nonetheless, participants are allowed to, encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that and create the documents that you see. So until about mid-morning, a little maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
You see, how are you, when you think about, starting to think about the rate cuts next year or whenever they come, how do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant structural shifts, and is that going to change how you look at a rate cut path?
The question of whether there have been fundamental structural shifts is a really hard to know the answer, and a very interesting one right now. The one that would affect, one that comes to mind, though, is just the question of where the neutral rate of interest is. And so, for example, if it's risen, and I'm not saying that it has, but if it were to have risen, that would mean that interest rates would need to be a little bit higher to convey the same level of restriction. The thing is, we're not really going to know that. People will be writing papers about that 10 years from now and still fighting about it. So it's just that it's going to be uncertain. So we're going to be making policy in this difficult, uncertain, really unprecedented environment. Someone once said that the natural rate of interest by its works, and that's really right. But that's very difficult because policy operates with a lag. So it's one of the reasons why we slowed down this year. We started slowing down at this meeting last year, reducing the pace at which we were adding restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that the shift back into services has not been complete, and it doesn't look like it's ongoing, but I don't know if that's right. Maybe people just bought so much stuff that they temporarily don't want any more stuff. They haven't got any place to put it.
Go to Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned, PCE inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are, of course, stickier. So in looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
I mean, the reason you wouldn't wait to get to 2% to cut rates is that policy would be too late. I mean, you'd want to be reducing restriction on the economy well before 2%, because before you get to 2%, so you don't overshoot. If we think of restrictive policy as weighing on economic activity, it takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and I think you'll see a reasonable estimate of the time lags and things like that it would take.
would be reasonable?
I wouldn't want to identify any one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
Hi, Chair Powell, Jean Young with Market News. Wanted to go back to the stickiness of inflation question. Over the past couple of years, a lot of central bankers have talked about the more difficult last mile of getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year. I'm curious, do you think something has changed in our understanding of inflation? Or do you subscribe to this notion still, or is it something different about the U.S. economy?
I think this, we felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions to supply and demand. And the second thing would be our policy, which was weighing on aggregate demand and actually making it easier for the supply side to recover because of lower demand. We thought those two things were going to be necessary. Sorry, say the last part of your question again.
If there's something different about the U.S. economy.
Yeah, so it's not that it may or may not be about the U.S. economy being different. I think that this inflation was not the classic demand overload, pot boiling over kind of inflation that we think about. It was a combination of very strong demand without question and unusual supply side restrictions, both on the goods side but also on the labor side, because we had a participation shock. So this is just very unusual. And we had the view, my colleagues and I broadly had the view, that we could get a lot of, you had essentially a vertical supply curve, because you ran into the limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand reduced. And, something like that has happened. It happened so far. The question is, once that part of it runs out, and we think it has a ways to run, we definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you will run out of supply side help, and then it gets down to demand and it gets harder. That's very possible. But to say with certainty that the last mile is going to be different, I'd be reluctant to suggest that we have any certainty around that. We just don't know. I mean, inflation keeps coming down. The labor market keeps getting back into balance. And, it's so far so good, although we kind of assume that it will get harder from here, but so far it hasn't.
Okay, we'll go to Megan for the last question.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
We're not talking about altering the pace of QT right now, just to get that out of the way. So balance sheet seems to be working pretty much as expected. What we've been seeing is, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up. The reverse repo facility has been coming down quickly, and reserves have been either moving up or as a result or holding steady. At a certain point, there won't be any more to come out of, or there'll be a level where the reverse repo facility levels out. And at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion, We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected, we think.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
So I think they're on independent tracks. So you're asking though the question. I guess you're implying the question of can you continue with QT at such time, QT, which is a tightening action, at such time as policy is still tight? And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time. Thanks very much.
My goodness, everything is going boomskis, guys. Boomskis, SPY boomskis, View boomskis, Mullen boomskis, BBIG boomskis, Momo scanner. What isn't pumping today? Okay, I need to go mute them. Rubbish. SPY all the way to 471 almost. I think Bitcoin is at still below 43,000. So wild. Even AMC is going boomskis. Even the Nun is going boomskis, Microsoft is not boomskis. Yeah, that's because it's choppy. Anyways, let me let's pull up the charts. The charts. Okay. Sheesh. What a run, guys. What a run. I mean, Jameson made what, 1,400%? 1,400% on SPY calls. Joe made $3,000 on SPY calls. My goodness. SPRC exploding to $7. View from the abyss back to $4. C4 back to the highs of the day, $6. Yeah. Even BBIG's been delisted, but it's pumping some way, That was wild. Yeah, so if you're holding calls in anything, congratulations. That was a nice run. Alrighty. Pizza, you didn't do it. Good job. Well, the market knew you were gonna buy puts, pizza, and then they said, you know what? Anyways, if you're wondering why the market is pumping as it is pumping, it's because of this, right? So obviously going into today, the market priced in the fact that the Fed was going to stay the same, right? That's not a surprise, right? So the market priced that in. You almost did, Jesus. And then so the reason we're pumping now is because we're talking about rate cuts in 2024, right? So 3 cuts coming in 2024. Obviously, that's good news, right? So market says boomskis. So for now, the question is, can we actually stay above 470? We've had this little pattern where we pump. If we do pump on Fed day, we sell out the following day, right? So is it going to be the same? I don't know if it is, because the trend has been up anyways. So I bet you we keep going up, but who knows? The trend is your friend. So in this case, we go boomskis, boomskis, boomskis. So SPY so if you look at some of these banks like JP Morgan and Morgan Stanley, I think the price target for the end of the year is anywhere between 470 and 500. So, we're at 470 already. 470 already. Santa rallies. Everybody buy the dipskis. Everybody buy the dipskis. So, yeah. So congrats if you had a good day with the markets. And hopefully the rest of the week continues like that. There's 40 minutes left already, so let's see if we can get back above 470. On the market, and so the market will pump. It hates when I bet against it. It does, Josh. Yeah. Take one for the team. Yes. Wait, did you get 38 cents? Oh yeah, you did, didn't you? I woke up When you sold at 40 cents, Eric. Oh my goodness. What perfection, Eric. Good job. Very nice. Even all the bears short exits la has stopped and Powell says to reduce rates. Yeah. Yes. Yes. Let me look at the daily really quickly. Just as I said. Yes, well done. So if I look at the S&P on the daily, obviously we have some resistance right there at 471. Yeah, so if you go back to 2022, well, end of 2021, 2022, right? So you can kind of see this resistance here on the S&P right there, 471, right? So 471 right there, that's December 2021 double top, right? So December and November of 2021 is when we hit 472. And then I think at some point in January 2022, we hit the same level and gave it a head and shoulder, right? So you have to head all the way at new all-time highs for the S&P, 480, 479, whatever, right? And then you have the shoulders at 471-ish. So do we struggle at 471, guys, or do we go boom skis? December. Puts are for losers. Puts are for losers. Yep. Puts really are for losers. So if you're holding some SPY puts, Powell said, excuse me. Excuse me. Do you know what naked thrusting is? Look at the beauty on the daily though. Seriously, look at that. Look at this chart on the daily. From 409. This thing has not crossed below the blue line. It's been riding it up, 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 up. Look at that. Look at that. You guys want to see green? You want to see green circle, guys? I see green circle. I see green circle on SPY. SPY go boomskis. SPY no give us no red circles. SPY hit new highs. Unless you bought some ODT puts at 471. Yeah, that's you. Unless you did, then you're happy. Then you're happy with a bit of a dipski. And updates where the blue line is. Well, see the blue line. Oh my goodness, guys. Look at the blue line. Now we broke below the blue line. SPY go dipskis. We get red circle. Oh my goodness. We get green circle at the bottom. Where's the green circle, guys? Where's the green circle? That's the green circle at the bottom, guys. Look at that. SPY got a green circle right there. And not a circle. All the way to the top. Oh, wow. Dang. I think that has to be the best one on the 1 minute time frame that I've seen ever. Wow. Puts are for winners, no puts are for losers. Well, puts are for winners now. Yes. but recession, but inflation. Eric, the market said we no care. You can take it and you can take these as well. Don't forget to smash a like, guys, if you haven't already. I would appreciate that already. I know you're smashing the like for the second time today, but just do it, and then you have a good Christmas. Alrighty. So yeah, smash a like if you haven't already. Hit that subscribe if you're new to the channel. And if you're not a member yet, click the link at the bottom of the chat from Nightbot. Come join us. Puts are for winners now, the last few minutes. You did. They're expiring tomorrow, puts. Yeah. I mean, yeah, we'll see. So you should be happy with those puts now, Jameson. So yes, good job. Good job. Good job. I mean, if you played with SPY calls, crushed it today. If you played with C4, you crushed it today. If you played with View, you crushed it today. If you played with SPRC, you're kind of pissed off. But eventually, boom skis. If you played with RSLS, at some point you crushed it today, right? So there's been a lot of crushing today for the markets. Yeah. Yes. Oh yeah, for sure. I mean, especially when you're hitting big resistance on the daily, right? Like if you're looking at the S&P and it's been pumping and we're getting close to 471 and you're like, "Ooh, that's resistance on the daily from 2 years ago." Maybe that's a level to look at for some quick scalpies. If you played with yourself, you didn't crush it. Well, Peter, maybe you crushed it. You know, if you played with yourself today, maybe you crushed it. You never know. Anyways, who are we to judge? Research, we're getting rich over here. Hey, we're with you. Yes. Oh my goodness. Spy side resistance dips, 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 dips. Welcome to the future. Yes, so dip skis. Anyways, SPRC looks really good. Yeah. I think it's annoying that it took this long though to get, to get to where it's at now, but yeah, it is what it is, isn't it? It is what it is. As long as it stayed above support already, for $5.80, I guess. Yes. Refueling. Oh my goodness, SPY. SPY's going down, guys. What if SPY went from green to red? We have 30 minutes. Green to reds. How funny would that be? Not gonna happen. But I mean, I can't complain making more money than you ever have, Eric. No, that's amazing. Like in the market or at work? I think you mean at work. Like you're getting paid more or you're just working more? You're working more, Eric. You're working midnight, you're working daytime, you're working on the 8th day of the week. Yes. And then you're drinking and then you're trading in the shower, trading when you wake up from a nap to go to the bathroom. I mean, how would you not be making more money, Eric? You're working 24 hours a day, and then when with the you're working 23 hours, and then your 1 hour of sleep you're trading. Unbelievable. Save lives. Focus on that. Wish I in the I know, Eric. Yeah, yeah, that's okay. Someday. When you go on vacation or something, take 2 weeks off at some point. When you take your vacation, then you could travel for a week, and then you could play the market for a week. You know, criminal. If they're looking for people to send to jail, Eric would be number one, along with Peter. Where's Dan, guys? Dan is hiding somewhere. Dan is hiding somewhere and finishing the market. If the market could cry, if futures could cry, they would cry and scream Dan's name. Unbelievable. Saving lives is overrated. Yeah, just like Arsenal. Why is that? I'm sitting here smiling. Yes, you are. Guess what I'll be doing all night? Learning futures or thrusting? Learning futures. Sounds good. Yeah, watch that video. There's education tabs in the futures channel. So yeah, watch all of that. Yeah. Don't try and get it all in the same night though, Jameson. Take your time. Otherwise, yeah. Take your time. No. Let's see. I don't know. Do you have access, Jameson? Yeah. Good. The futures have been entered. 2x speed all day. Yeah. There's a whole bunch of videos. There's a whole bunch of little notes that is in there. So take advantage. Did anybody hold SPRC all day today? Anybody? Anybody hold all day? I know that thing's been annoying, but let's see. No, bunny, that's okay. Speed life, if that was possible. Well, no, because you're already in the present moment, so no way to fast forward. No way to fast forward. Now we just need the market to close, honestly. I think we've had enough chaos today. I bet you something's going to go after hours, so we need to pay attention. I bet you something is going to go boom skis after hours. With all this positivity, everybody's feeling better now. Something's going to go boom skis. This morning, been sitting on your hand since. Let's go, Josh. All those dip buying, all the dips, all the deep buying. It seems like it will run after hours. Maybe. That's if you bought in earlier, Richard. If you bought this thing at $5.80, $6, then you have cushion to maybe gamble after hours. If you're gonna buy at $7, then your risk is a lot higher, right? So again, it's fighting, which is good. All the deeps into the highs west. Okay, 706. I mean, we knew this thing had the possibility of doing this. It just took way too long. But I mean, it did a really good job playing with the demand zone, right? So, did a really good job there playing with the demand zone. All the deeps. And rejection. Na 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 na. La 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 la. La 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 la. Okay, perfect. Dips and the chips. New high 640. Nice. Very nice. Yeah, I think I'm just ready for the market to close. I'm ready to go after hours now. That's a nice push, Wes. Very nice push. A nice little breakout. Choo, choo, choo. I like the way it's retested the 200 on the last two bounces and actually held. So that's nice. That's nice. Link. LQR is up 80% now. Very nice. Very nice. If the file on S1, you mean LQR? I almost expect that to happen, but who knows? Who knows? What do I think, RS? You're in at 550. Well, I mean, do you have a stop loss? This thing is up 150%. You're in your break even, so I would like for it to stay above $1.50. Stay above 150, stay above 150, stay above 150, right? So if you're find a stop loss, set a stop loss, do something. I mean, and I know we've obviously enjoyed watching this and playing with it and talking about it, and it's done really, really well, right? So, but at the same time, this thing was $2 yesterday. It was $6 today, right? So, $5.50. Yeah, no, I said $1.50, but yeah, no, 550, right? So, so you're at break even. You're slightly losing. So yeah, set a stop loss. $5.50. Okay, fine. Uh, So you don't want to be in a position where like a stock has gone up 100% and more, and then now you're red while it's going for a retest, right? Because even if this thing goes to $5 or $4, it still looks really good because it's had a really nice rally. But you don't want to be in that position though, where you're holding a bag after a massive run. I would trade that, Eric. Yes, 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 yes. That is true. Yeah. Don't worry. I think as the markets, as the sentiment turns to bullish and Bitcoin goes boom skis, it's only going to help these smaller projects. And well, even if just crypto in general, like boom skis. I don't know if we're ever going to go back to like volatility. Like back to those days of like I don't know. I hope we do. But Joe Linton, he scored. Ooh. Ooh, Joe Linton. Ooh. Ooh. So for some reason, we can't seem to break above $7.10 and stay above it. Champions League. Don't mind me, I am looking for. I missed the goal already. Thought maybe they're gonna give me a replay. No replay. No replay. Anyways, rubbish. The S&P is going back up, guys. Spy said, ooh wee. Right? Spy said, hold my beer. We go back up. Oh my goodness. Joe, what are you buying your wife when you go home? Are you getting her anyways? What are you buying your wife when you are on your way back home? Are you trading that money's in your wife's account again, Joe? Or she's gonna finish you? She's gonna change the password. She's gonna change the password. So Joe's been using, his wife's account to trade options, and she's gonna look at this money and she's gonna say, "Ooh, okay, this is nice. How do I change my password? Hello, FBI, someone hacked my account. Can you change?" INM. I know it needs. I need volume. Okay, I'll take a look. Yeah. To be determined. Let's see. INM. Pharmaceuticals. Yes, for sure, Jameson. That thing needs volume. For sure, for sure. Let me look at the daily. Yeah, it needs Jesus at the same time. Anyways, I mean, for now, it's nice that it's gone from like red to back to break even at least, though. So, as long as it stays about 31 cents, maybe it's not too bad. Why are you hassling Joe? I am not. These are mine I zeroed to put in ours. Oh my goodness. So Joe took his wife's account to zero. And then he went back to his own account and made $3,000. Can you believe this, guys? Really? Oh, she's gonna finish you. She better never see these monies. She's gonna finish you. Wow. Oh my goodness. Unbelievable. I can do that, Richie. Um, Dan, can Dan hack my account and play options for me? Yeah, except Dan doesn't play options anymore. He's been banned by a virus. Oh, that couch has your name on it. Seriously. Joe's wife say, "Hey, honey, I have some money for you to play with. Can you help me invest this monies, please?" And Joe took the monies and bought ODT options. Zero. Zero. Account is bleeding. Account is looking like Mullen or AMC. And then he goes back to his own account and he makes a few 100%. Unbelievable. She hasn't said anything. Yes, don't worry. Well, before you enter the house, make sure there's no traps behind the door. No play options no more, Dan. Yeah, some spy calls for December 29. Okay, nice. No, the markets look good though. So looks like we're going back to 470 for the S&P. So that's impressive. On TOUR. Let me look. TOUR. Newcastle. Who scored? I'm just waiting for the replay. No replay yet, Stuart. So this thing sold off all the way to a demand zone, which is nice. Jameson, the one good thing about this one is like it went to the abyss and then went back to green, so that's good on the daily at least. And the volume actually did come through, so might be something to watch into tomorrow or anything like that. Above 80 cents. Above 80 cents. Damn, Milan is struggling. Let's go, Pablo. Oh yeah, Joe Linton. Yes. La 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 la. Yoshi, the 200 on the daily. If it's on the daily, then I like it. If it's not, or you're looking at a smaller time frame, yeah. But either way, though, what's crazy is these guys IPO just this year, and then they managed to do a split in the same year. Anyways, so double bottom at $3.20, and then boom skis. That's quite nice, actually. Copy and paste this link. Watch it. Oh, let me see. Let's see. Where's the link? It's loading. Away. 'Cause I'm watching Newcastle and Milan. Stuart, I'm glad they benched. I'm glad the Gordon. Yeah, I'm glad they benched. I'm glad I need Gordon to play 90 minutes and then be benched on the weekend. I'm glad that Isaac is on the bench. I don't need that idiot playing. Don't need him play. Can you see my sunshine? Oh, I need. You can't really hear the audio yet. This is the one that says "and it's gone," isn't it? Yeah. Josh, I like this one. And it's gone. Money's in the savings accounts, and it's gone. Your money's has been invested, and it's gone. What happens to it? Isaac benched. We don't need you. For the channel. Oh, you mean like a clip? Yeah. I need to play it on the other screen there so you can get the audio, because this, for some reason, it doesn't always give me the audio on this one. La 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 la. Anyways, so it looks like C4 is bouncing off demand zone, which is nice. 535, not too bad. View obviously had a nice run earlier and then came back down. SPY, no give a damn about nothing. It's going back up, so that's good. ALT, beautiful run there, Wes. Maybe a retest of the previous breakout. And yeah, impressive. Permanently benched. Rest of the season, don't hear from him. Typical. I've had 3 green arrows, pizza. Three every week for the last 3 weeks. I've gone up and up and up. I need some Ray in your life. Ray, dude is wild. Who's Ray? Who's Ray? I had more green arrows than red arrows for sure, pizza. Because I was in first for like 6 weeks, and then I went down for like 3 weeks, and then I've gone up for 3 weeks. Easy math, you know. You have 6,000 shares at 15 cents. Okay. Yeah, you need a nice push, Busty. I wish that thing had more volume. He always does that. Embarrassing behavior. Well, nothing really changed from the day I posted to today, has it, Stuart? Nothing. The only thing that's changed is one person moved up. 6 weeks, Stuart. Hugh. 6 weeks. I was almost, my back was almost hurting from standing at the top. I needed to, rest a bit. Today, why? What do you mean, why, Gary? The markets hit all-time highs today because the Fed said, because of this, right? So the Fed is planning on cutting rates, indicates 3 rate cuts in 2024, right? So that part of it wasn't priced in from the markets, right? So boom skis. So rates have obviously been going up. So they're planning on cutting, pivoting, pivot. Oh, Ray. Okay. The Irish guy. They need to give one of these Milan players a red card, Isaac needs to stay on the bench permanently for the entire game and then play 90 minutes. Do they have do they have another game next week, Stuart? Is there another game? Because then Wilson is going to play, and I don't like that. Actually, I have a plan for Wilson. Or I need Isaac to play, and then he can be gone game week 18 because I don't need him. I need him to play. Nope. My back was hurting from looking down, Anyways, rubbish. Oh, that's Ray. Okay, but yeah, that's Ray. Ray Hudson or something. You have to say the full name. How am I supposed to know Ray? Ray is like Ray this, Ray Dalio, Ray Hudson, Ray McDonald's, Ray these, sun rays. Ray Hudson. I would know immediately who that is. I like Ray Hudson. He's a dude is fun. Probably the best. Yeah. The way he screams, Uh, saying I was standing up straight, and I was, anyways, rubbish. ADCT. No, yeah. The 20 EMA looking for more. That's your reasoning. Okay. Yeah. Hopefully you get a nice rally. La 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 la. You never watch fake Madrid games? No, you can't just say Ray. I missed that part. I just scrolled up and I saw your message now about Ray Hudson and fake Madrid. I just saw that for the first time, Pablo. Yeah, I know. Ray Hudson is the best. Unbelievable. Okay, well, first have Dunskies. Dunskies. Selective attention span. Well, yes. RSRX. Okay. Come on. Do we have one more rally before the market closes? RXRX. Radies. Oh my goodness, Wes. Dang. I mean, it's not a whole lot. It's 11% for the day. Maybe that's why it doesn't show up on the scanner. But stuff like this, honestly, this is the type of stuff you want to pay attention to. Like, that's a nice simple breakout, and that's another really nice simple breakout. Like, look at that breakout, right? It's nice and simple right there, right? Super small candles. That's so easy to manage. And then boom skis, and then another nice breakout, and then new boom skis. That's very nice, actually. He doesn't have any span, at least upwards. You know what? You know what? Where's the accountant lady? I have no idea, Pablo. No idea. Probably hiding with the 1% guy, you know? So yeah, View's done really well today. Your next resistance, if you're still playing with this, is 420. $4.20. And C4 is holding the demand zone still, so that's still hopeful. And ALT is still pushing. Still pushing. So okay. Okay, interesting. Oh. Interesting. I saw it just because of the volume alert. Yeah, I think the volume alerts, yeah, $67 range. Yeah, the volume alerts are very good, Wes. You know, yeah, I like those volume alerts. You can catch the stuff as soon as it goes like 2x the actual volume or anything just slightly above. You know. Markets going up means a market running up on shorts. Puts la 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 rock bottom. Yeah. Yes. Sure. Large caps. 30 and 33. La, 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 la. Perfect. On the 4 hour, yeah. Yes. Anybody planning on holding anything overnight other than any overnight holdings? doesn't really count, does it? Cool. Yeah, I've seen CVNA go off the scanner a few times. Like I mentioned earlier, as long as Neo stays above, like, if you're playing with Neo, as long as that thing stays above $7, you're fine, right? Maybe it actually was a good gamble of $7, right? Like if you look at the daily chart, every time this thing gets to $7, it's a bounce. And today's been nothing different. It's been the same today, right? So it's been bouncing off this level for the last year, right? The last year, $7 pop, $7 pop. So if the market keeps pumping, maybe this thing will find a way to to send it. So yeah, it hit 705 today, right? And then back to 740. So that's not too bad. Wes, why are you holding some bags? You holding bags or what? What is the of a gap up on SPY? You're planning on holding those calls, aren't you? I mean, if we're closing like just around 470, I mean that's pretty positive. It's not like we're crashing into the close or something. That's usually when you expect these gap downs, right, Joe? So when the market is selling off and there's obvious weakness, then it just continues into the next day, right? It doesn't really seem like weak. So then maybe the likelihood of a gap down isn't very high, but I mean we are obviously extended, so who knows at this point? You're gonna swing some SPY puts, so Joe is holding some SPY calls, Jameson is holding some SPY puts. Yeah. So I think Jameson is using the premise that the market is overly extended, and Joe is going where the market is strong. We continue to be strong. View looks beautiful still. 420, next resistance. You have calls as well, Dan? Okay. So Joe and Dan have some calls, and Jameson has puts. Who's gonna win? Friday? Okay. Yeah. La 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 la. Who's gonna win, Jameson? Calls or puts? I mean, based on the history of the market for the last week, it looks like calls will win, but you never know. You never know. Hopefully, hopefully it's not they're not massive positions and then expiring on Friday. So yeah, congratulations on coin and AVGO, by the way. So you sold one of those, right? And then you held the other one. Good job. Very nice. Very, very nice. AVGO. What is it at? Is it at 1090 yet? Oh, yeah, it's exactly at 1090. Very nice. Congratulations. Good job. Good job. Almost in the monies. Almost in the monies. Very nice. Yeah, it's nice to take one off the table just in case, something crazy happened today and the markets crashed, right? And SPY is above 470, so those calls are looking good already, Joe. Those calls are looking. Seriously, Wes, AVGO has been a monster. It's been pumping the entire week. Not smart to buy SPY calls at this point. You missed the boats. Yeah, we'll see tomorrow. We'll see tomorrow, Gary. At this point, it's yeah. Yes. Watch these criminals gap it above 471 tomorrow. You made $4,000 on AVG. Oh my goodness! Congratulations. That's amazing. You made $4,000 on one AVGO call. Oh my goodness. That's after selling the other one at 100% yesterday. You still made $4,000? Dang. Good job. Wow. Brilliant. Good job. In case of a gap up, you hedged. Okay. Nice, Jameson. That's amazing. Yeah, no, she's been talking about these AVGO calls. And yeah, and then she sold one yesterday. Thanks. You're welcome. Teamwork. Good job. Let's see. Let's see. Yeah, SPRC still looks kind of good. The S&P don't no give a damn. S&P go up, 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 up. Yeah, puts a week out. Yeah, as long as we stay below, 471. But I don't know what's gonna happen tomorrow on the gap up. So, 2% dividend. Yeah, it's crazy to look at the daily chart though for AVGOS, and the market is closed, guys. Ding, ding, ding! It is officially over, and SPY is still going up after hours. Not a whole lot, but not a whole lot. So let's hang out for a few more minutes, guys, and see if something shows up after hours. Because I think something will today because of the positivity in the market. Let's see if something shows up, and then we can go from there. AVGO, yeah, no, it's extended. I think there's resistance right where it's sitting at too. So resistance. So I don't see anything yet for news. As soon as something shows up, we will talk about it. ESPR just had some news. US FDA updates. Okay. ESPR. Ooh, that thing popped and then crashed. Look at the size of that candle. This is why, again, you want to be very careful with that first candle, right? So because it could just be a disaster, right? That thing had a massive push on that candle. Wow. Wow-wee. And then straight back down to the abyss. So that's the only name that has news so far. Yeah, yeah, exactly, Dan. Exactly. And again, if you go back a few years, you might see some of these levels, right? That's where that 471 is coming from. Anyway, 471, 472. But other than that, you're looking at all-time highs again, Dan, right? 479, 480. Yep. So I can before sundown. Okay, sounds good, Joe. Have a wonderful rest of the day. Good night. See you in Discord. Make sure you bring your wife a gift. Otherwise, you're sleeping outside after you lost her monies, and then you made monies in your own accounts. Unbelievable. Unbelievable. But at least you made money still. Before. Sleep. Yeah. No, exactly. And hopefully people really, look joy. Hopefully people really, take the time to go through stuff. Thanks. Thank you, Pepe Joe. See you later. Be safe. For futures especially. So no, spies are 52-week highs. No, all-time highs is 479. Dan. So if I zoom out on the S&P on the daily, yeah, it's a little bit higher. So these highs are 52-week highs we're hitting. All-time highs was for the S&P was back in 2022. Right there. 479, 480 basically. So 479.98. 479.98. So 480. Yeah. So we hit that level. The exact day was January 4th, 2022. Jan 4th, 2022. SPY went boom skis and hit highs. Yeah, it's better to take the time and study than jump in blind. Exactly, Joy. I think in futures, whether it's futures or anything else, that's become a very common mistake. Where people people get excited and then they take the monies, and then they go to this new challenge, and then whether that's a challenge as in, okay, I'm getting into options, or I'm getting into futures, I'm getting into this, and then the money's is gone skis, right? By the time you actually know what you're doing, the money's is gone skis. So there's no need to rush. Futures aren't going in. Futures are not going anywhere. Options are not going anywhere. Yeah. So take your time. Ask questions in the ask questions. The Robs, the Lins, the Joys, the Dans will help you in the futures channel. Just ask. And looks like Neo kind of closed at the highs of the day almost. View isn't doing anything there. ESPR nothing. C4 nothing. S&P still flat. So now we wait. Onfo has news. Ooh, okay. Or just pumping. Yeah, some of these that pump without news, they just we kind of don't really see them because there's no news. Yeah, 70 cents West. Onfo. Today was spicy. Only 1% and options go 500%, Gary. Yes, that's the beauty of options, though, right? That's why people love these options. And low float, yeah. That's why people love options, because a bit of a move, and you can make a lot of monies. I mean, Jameson made what, 1,300%, 1,400% on SPY calls today, right? SPY went up 1.37%, right? So that's it. Jameson made 1,400% though, 1,500%, right? So yeah. It means they either bought a call, they bought a put, and the market went in their direction, right? And depending on the time, and the volatility and a whole bunch of other things, right? The market went boom skis and they made a lot of money, right? So yeah. Yeah, exactly, Musty. Exactly. Richard, it's pumping after hours? Okay, nice. It failed after hours, Wes? Oh, okay. 5:15. Okay. Well, at least you're green. Dangerous thing is and this is why, like, you want to warn for C4 is like, yeah, the stock looks amazing, but it's up, quite a lot. So NXU has news. NXU with some news. NXU. Nice. So NXU says NXU engages in a partnership and investment in Links, whatever the company is. Anyways, let's see if that thing actually does anything. It's a 2-penny stock, so meh. 1,400%. How does that happen, Sing? Oh, it's monies. You can also go to zero very quickly. So options will bless you and they will undress you quicker than a stock ever can. Right. So all these markets and all these vehicles that seem to give you nice endless opportunities, Sing, they undress you quicker than anything else. Had no day trades available, so I had to make my one exit and had it exactly the perfect time. That's amazing, Jameson. Ayo, Rob. Ayo. You're shorting it, Jasmine? Well, very nice. Bless you and undress you, Wes. So when you see people, when you see Jameson make 1,400% in SPY calls, and you're like, oh my god, I want to go jump in too. Just be exactly Philly, right? High risk, high reward. High risk, high. I mean, there are safer ways to play options. Very safe ways to play options. Look at that. Jameson says I go to zero a lot, right? So don't just look at him make like 1,400% and you're like, oh my goodness, that's amazing. He goes to zero a lot. So does Virus. What's funny is I was saying source virus without seeing your comments virus, and then your comments came right through. Oh my goodness. Yep, virus goes to zero with options a lot. Yep, C4 calls, right? If you bought some C4 calls yesterday, if you bought some calls for C4, today you made 9,000%. Wild, right? 9,000%. 9,000%. In a safe, like exactly, Wes, exactly. You could buy some nice leaps when when Tesla's crashing, Apple is crashing something, or when it's hitting resistance, right? You could buy some nice puts, some nice calls. You could do really well. So it's not always like gambly when you play with options, right? It's not. Uh, yep. Yeah. I was about to use that whole saying of like 90% of options expire worthless, but that's not everybody like cares about what they expire at, right? Oh, Wes, yeah, yeah. Yeah, 1,800%. Yep, today. Yeah, $5 calls. Yeah, still those Gary. Yep. Yeah. So yes. Yes. Monies. Monies. Uh. Uh. Let's go. How to upgrade? Well, looks like that link has been lost. Yeah, I lost the upgrade link. The upgrade link. Need to scroll up. Uh, 2 cents? Yeah, it's 2 pennies. That's why I just kind of looked away for a second. I mean, it's up 24% though, Wes. It's up to Musty? Yeah, it's up 24%. So, yeah, they have news. Whatever that means. Yeah. Trying to find a few contracts on equal. Okay, sounds good. Yeah, that's good. Anyways, again, don't forget to smash a like, guys, if you haven't already. Please and thank you. Hit that subscribe if you're new. If you're not a member yet, click the link at the bottom there from Virus and Nightbots. If you're not a legend yet, become a legend. If you're not a goat, upgrades, become a goat. Alrighty, come join us. We yeah, had a really good call today with Casey. It was good. It's good. And some of the lessons, he made some money, so that's good, right? So if you want to do live trading when the market is open, upgrade to the goat level. If you're not a goat, well, 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 become a goat. Alrighty. So there's only two headlines here that I see. Nothing else for news. Let's give it another 2 minutes or so, and then we can hop off. 2 minutes, and then we can hop off. Yep. Even Mullen is green. Mullen. That's what happens when you're in the bull market. Bull market, everything goes up. Everything is green. Everything green. Everything green. Record highs? Yeah. Everybody's going to be celebrating green, 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 green. When I take time to TA and everybody ignores. Yeah. Like in stock general. Mm. Let's see. Oh, CYN? Yeah, Musty, it's better for you to post stuff like that in trade ideas. Like if you have, and just like one post. Don't, right? So like if you have an idea, like just, do your thing, right? Your message and the chart in the same post, and then just post it in trade ideas. Because people look at that for like ideas, and people look at stock general for chats, You're a sheep, Gary? No, you're not. Well, yeah, let me go back to on4. On4 is, it needs to break above 70, 75, 76, 77, 80 cents to give us a breakout. So on4 is a bit questionable there. A little bit questionable. Alrighty, y'all. We will leave it here for today. Be safe. Don't do anything. Yeah, trade ideas. Yeah, there's a whole bunch of channels. Hugh, how come you're not a legend yet? I'm just asking for a friend. How come you're not a? That's why you're missing that channel. I think, Hugh. Upgrade to legend, Hugh, or just become a goat. Or yeah. So I think Hugh, you're missing that channel because of your membership. I think. Yeah, you're missing a whole bunch of stuff. You're missing the signals and the scanners and trade ideas and IPOs and SPACs, and yeah, you're missing all of that stuff, Hugh. Alrighty, Dan. Much love. Good job today. Hit the gym and wait for futures to open. Then yeah. And alrighty. So become a legend, Hugh. Yeah. Just become a legend, and then yes. PXMD. Okay. As a swing, maybe. Good job, CM. Thank you very much. Let's use that and see if we can make some monies. And yeah, Hugh. Yeah, absolutely. Come on, become a legend, Hugh. Till you're profitable when you start trusting yourself, Sing, and you can execute. You're seeing everything, Sing. It's not like you're not seeing. You're seeing it. You know exactly what we're talking about. You just hesitate every damn time, Sing. You hesitate, right? So I'm telling you, paper trade. Are you trading HRYU? I am not, Trisha. I am not. I am not. Yeah, if you asked a professional, they would say 1 to 2 years before you become profitable. Yeah, I think we've made it. We've made it. Yeah, I think we've done a good job of making the whole thing, like pretty as simple as possible. With in terms of like technicals. I think thank you for the super sticker. I thank you for the super sticker. Thank you. We've made it as simple as possible. Um, you're on the sold out like the very first level, Hugh. The very first level is the level you're on. Yeah. So become a goat, become a legend, become a. I think become a. Yeah, I think from like Discord community up, that's when. But then you don't get the signals. That you have to become a legend to get the signals, like the and all of that other stuff, like the momentum scanner and the Hall scanner and the breaking news. The breaking news is fire, Hugh. Become legend and go to the breaking news. Uh, and then you have happy holidays. Thank you very much. Thank you. Have a wonderful. Hopefully you're having a wonderful holiday as well, Curry. Thank you for the super sticker again. I appreciate that already. Thank you. Much love and yeah. I went red today. I went red today. If I did everything without hesitation, I probably could have made hundreds, if not thousands today. I'm telling you, Singh. I see the things you're saying, and I'm like, that's very good, Singh. How come you're not executing on that, right? So if you executed on everything you typed in the chat, ooh, fire, right? That's why I'm telling you to paper trade so you can build your confidence. Because I know you're missing confidence. You're lacking the confidence. You're lacking the confidence because I know you have the thing in your head, or everything makes sense, you're just not executing as you should, right? But that's why trading is 80% psychology, right? So it's all in the you can be good at technical analysis, and if you're not like, if you're hesitating because you don't trust yourself, then you're just still going to struggle, right? Yeah. Bye, M. Have a wonderful evening. See you tomorrow. Good job today. um Safer stocks in our swings. Thank you, Jay. Have a great day as well. See you tomorrow. Always undersized on your winners. Yeah. Let's do it, Hugh. Come on. Come on. Is the trading psychology in Discord? Do you mean the video? Yes, it's in Discord. It's in the education channel, or it is in the. Let me get you a link. So if you're this video, market psychology, right? So is what you're looking for. This one. So it's one of the podcast episodes, right? So Richard, it's at the bottom there. That's the link. So watch that, and yeah, there is roasting psychology too. Yes, there is actually. Yes, there is. So C4 is trying to curl. SPY is just relaxing, like nothing happened. Relaxing, chilling. NXU isn't doing anything there. There's a whole bunch more now with news. So this one just had news as well now. If I can not open other tabs, please, and thank you. So CDXS. Nice little, well, I mean, not good enough. La 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 la. They're all in trade ideas, Hugh. They're all in trade ideas and the signal channel and the breaking news channel. All the news, Hugh. All the news. All the news. You're gonna miss all these crazy after hour pampas with the news, Hugh. Listen to one of the trading psychologies. It really helped. Yeah. So there's a whole bunch more, right? So there's the one I posted. There's the other one that says keeping it simple. And then there's the other one about the market being rigged, right? So there are a few more psychology episodes from the podcast. So okay, they have multiple articles, it seems. No PDT in the cash account. Yeah. No, I wouldn't be using a the margin account. I'd use the PDT, the cash account. They're in the education. Some of them are in the education channel, but I would go to the Discord call recap channel and look. They're all in there. So from September 3rd, you scroll down. There's a whole bunch. I'm sure some of them are in the education channel too, but actually they're all in the education channel. Go to the education channel. There's 3 in there. Yeah, in the education channel, yes. So stuff about market psychology, and planning, and yeah, there's a whole bunch of stuff in there. Alrighty, all. So we will leave it here for today. And la, la, la. Yes, sounds good. So have a wonderful rest of the day, all. Be safe. See you guys in Discord. Good job today. And let's keep it going already. See you guys. Much love. Thank you all for the support. And let's keep making monies, please. I appreciate you guys. Smash a like before you leave. And already, all. Bye, guys. Bye, guys.